Good morning or good afternoon, wherever you are at. Get that thing rolling real quick. Good morning. Let me know if you can hear me and see me. If you would, I'd appreciate it. My name is Tony Benson, if we haven't met, and I will be your guide for the next hour or so. Awesome. Hey, Kevin. Hey, Helen. How's everybody doing? Lots of people here today. That's good. Good to see y'all. I've still got some coffee left, so forgive me. It's only 9 a.m. out here on the Pacific Coast, so on the West Coast, so which is actually late for us, right? Or at least for me. I'm usually up quite early, so market opens at 6:30 our time. So I know a lot of the East Coasters are just scratch their head, like, how do you do that? Get up, you just adapt, go to bed a little earlier and get up a little earlier. So, but let's get the disclaimer out of the way real quick so we can go have a little bit of fun. Basically, it says, I'm not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If we do happen to mention a trade or talk about a trade and discuss a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So with that being said, let's do a quick review of all the upcoming events. Of course, that is just next week is Patterns in a Flash, which is twice a month with yours truly. If you are a subscriber to Patterns in a Flash, I will see you there next week. If you are not a subscriber yet to Patterns in a Flash, I would suggest at least getting the trial for 2 weeks, as you know, is available, and then come out and next week you can join us, because twice a month I do a 1-hour session, just like we're doing here. But it's exclusive for subscribers to that tool. So, and you will see that some today. I'll show you a little bit about what it is if you haven't experienced it or haven't seen it yet. So, and then you'll also get 2 patterns of the week. So, because I do that once a week, you get a pattern of the week where basically I highlight, supposed to be 1. I've been doing 2 lately, a little more than that this last week. So anyway, Inner Circle is also twice a month, September 24th and 25th. And then Trading You, for those of you that are subscribed to that, that is September 27th at 8 to 9. Mastering the Trade is September 29th at 8 p.m. Monster Market Movers, September 30th. So you have pretty much every single day covered of next week. You can be in something, one kind of an event, which is pretty normal, right? The mastermind group is Tuesdays. And then, of course, Power Hour. And then the one we're doing now, Trading Coaches Playbook. That doesn't roll off the tongue like the old one, but so I'm still kind of struggling with it. But I'll get there. Then Power Option Plays is Tuesday and Saturday. Just adjust this camera a little bit. Cover Call Explore, of course, is on Saturday. And then E-Mini Think Tank with Brandon is 3 days a week. They're 9 to 11 Eastern time. If you have any questions about any of those, get a hold of the support team. They are spectacular. They will take good care of you. And then, of course, you can follow us on all the different social media places. So now let's get to the topic of the day. Only premium patterns. What does that mean exactly? It means that if you're not trading a premium pattern, then you might be in trouble. All right. Looking for, and if you, those of you that know me know that I'm a patterns guy, right? Even somebody dubbed me the pattern whisperer, which I thought was kind of cool. Actually, it's flattering and humbling at the same time. But patterns are extremely important when it comes to trading. And the reason they are is because they are just a visual representation of the underlying emotion of the market, of how the traders are feeling about that particular stock or that particular, the market in general, right? And if you haven't been around trading long and you haven't figured out yet that it's an emotional marketplace, that is what drives the market. There's the old saying, right, that news drives the market, which is partially true. On the surface, it's true. But in reality, it's the underlying emotional reaction to the news that drives it, right? Earnings drives the market. That's another old mantra. When the reality is that the earnings is just the superficial surface layer thing. But underneath the surface is how traders feel about the news and how they emotionally react to the news. That is where patterns come from. That is one reason that they are consistent and reliable. Because we as human beings, as much as we may not like it or like to admit it, we're emotional beings and we are habitual. And if you don't believe me, then pay attention to every morning when you put your shoes on. Which one do you put on first, your left or your right? I mean, you can look at every single day. We go through all these habitual routines and you do the same thing every single day. And it's really no different when it comes to trading. You get into this routine. We have mindsets. We have different beliefs and underlying emotional currents that drive us to do things and make decisions the way we do. And the beauty of patterns is that they show us on the surface what the underlying feelings are, what the underlying emotions are of traders. Hopefully that makes sense. Maybe it's a little deeper than you're used to. I don't know. But the important part, and part of the reason that I'm covering this is because, as many of you know, I've been day trading all year. I got back to it the first year. I hadn't day traded for years and years and years. But I was doing well for a time, and then all of a sudden, for a few weeks, I kept getting beat up over and over, and I beat myself up trying to figure out, what am I doing wrong? I had just a hitting streak, if you will, not a streak, but a slump. So I got in a slump, and I'm trying to figure out, is this something I'm doing, or am I just in a slump? And then I realized that I was starting to take trades on patterns that they really weren't premium. They weren't that great. And so I slowed myself down. I pulled myself back and said, okay, regroup, right? We have to do this no matter what you use baseball as an analogy, whatever you want to compare it to. Sports is always a great analogy, right? Because a lot of people are familiar with sports. We all watch sports. Everybody knows what baseball is. And if you're in a slump, sometimes you got to step back and ask the questions. Is it just a slump? Am I just going through a period of drawdown? Is it just one of those bad times? Or am I doing something wrong? And I realized for me individually, of course, is that I was taking trades on stuff that I should have skipped out on. I should have left them alone. It wasn't spectacular. They weren't great patterns. So that is partly where this came from, which is where a lot of the coaching I do comes from, is my own struggles. And when I run across the speed bump, I have something that I run into and it's like, okay, what am I doing wrong? And then it's like, okay, that's a good topic to cover, because I'm probably not the only one here that struggles with this, right? I'm going to guess there's probably one or two of you here that have had one of those periods where you go through a slump or you start to backslide. You know, you get in a hitting streak, and then all of a sudden you start to think that you got it all figured out. And then all of a sudden you go into a slump, right? What was that? Okay. So this is, and I don't know if is Will here. I stole this from Will the other day. I think it was in Trade You. I said something about, I mentioned what I was going to, this topic today, a couple of days ago. And he says about opportunity. He used the little pun, if you will. I don't know if the pun's the right word, but it's opportunity, right? Premium patterns produce the best trades. And that's really what we need to look for. So let's go now. And I really am going to spend the bulk of the time today just looking at charts. And essentially what I want to do is go through and show you the process, excuse me, kind of the process that I go through from start to finish, really. So first, let's take a peek and see what's happening in the overall markets. I don't know if I don't have the markets on that screen there. Does anybody notice this, the big sell-off we've been having? I mean, obviously the market, and it's interesting. It's not, I think this is very different than, I know you probably see me looking over here. So you can see that the screen's back here on my right. I've got a dedicated trading machine. All I do on this machine to my right is trade. I don't do anything with it. I don't do any coaching. I don't do any emails. I don't do any business. I don't do anything on this but trade. It's just 100% for trading. So that's why I'm looking, if you see me looking over here, that's what I'm looking at. Even though I don't have quite the same information on this machine. I only have 2 monitors for this one. But the last week and a half or so, the market has trailed off. It hasn't sold off, because what we've seen before in the dips, in fact, let me just bring up the S&P real quick here. what we've seen in the last few, and I'm just going to throw some vertical lines on. Actually, I'll use the pen. That's a little easier. I mean, this one we had a little bit of a trail off. Here was a few days of trail off, but this dip was quick, right? 3 days. And then it regrouped and came back rallying. Here we got just a 3-day dip. Here's a 2 or 3 day big quick sell-off. Here's a 3 or 4 day big quick sell-off. The last week and a half has just been a steady decline. Not a quick retracement, not a, hey, let's take profits real quick and then get going again. It's been a little, and it seems like every single time, each of the days, like this day, right? It tries to rally. The bulls try to get it here. The bulls try to get it. And it seems like every single time it starts to rally, the market gets met with selling pressure, which is kind of the opposite of what we've been seeing here. On these pullbacks, we get a pullback, and then the buying pressure comes back in and it starts to go back up. Right? Everybody starts buying the dip. That's the old mantra, especially in markets like this. Buy the dip, buy the dip, buy the dip. But this thing's been dipping for a week and a half. And you only have one day, day before yesterday, where things actually came back in and rallied up quite a bit. So it certainly looks like, and it feels like, there's no buying the dip right now. And what I'm assuming is that those that have been buying the dip are either expecting more of a dip, or they want more of a dip, or they're out of capital, which is the big question, right? When you get a whole slew of retail investors coming in, a lot of new people into the market, which is what's happened in the last year, right? Which is always an indication that the top is near. Back in 2000, the late 90s, you had a plethora of people coming in, day trading, people quitting their jobs, trading for a living, day trading. And a lot of people only knew the bullish trade, right? And we're seeing a very similar situation right now where people, every time it dips, people buy. And the average everyday retail trader that isn't experienced, isn't knowledgeable, that doesn't understand the market that well, and understand that eventually we're going to turn, they're buying the dips. But what happens when they run out of capital? What happens when that new slew of traders coming into the market, right? You got this huge influx of new people sitting at home, working from home. Now they can trade, they can watch the markets because they don't have a boss over their back, right? What happens when they stop coming into the market? And what happens when they run out of capital? Or what happens when there's a big pullback and they lose their shirt? And I don't know when it's going to happen, but right now, this last week and a half has felt like one of those situations where those newbies aren't coming in buying. And I would imagine that the amount of people coming into the market right now, the amount of people opening accounts is slowed down quite a bit. So we're in that situation. I think we're starting to see, at least it, like I said, it looks and feels like it right now. And it may be in the very beginnings of the retail trader slowing down and not putting their capital to work, waiting for a bigger dip. That makes sense? I lost my chat thing. Where did it go? So basically, I don't know. I didn't have the markets to be. Nope. Okay. So what we'll do now is go to, so this is a watch list I have, or a filter, I should say. And I was asked this yesterday. I'm on every morning at 7:30, every Thursday morning, I should say, at 7:30. I'm on, I do about 30 minutes on Benzinga with their audience, on streams live on YouTube. And so I'm on there with Spencer. And yesterday, a gentleman asked me a question that I have never been asked for, because Spencer asked me, how do you find your candidate? What's your process? What do you do to find trades as far as patterns? Because obviously I'm a patterns guy, right? And the guy sent through the chat, he said, how often do you get a headache? Because I started showing, and I'll show you right now, I mean, exactly what I do, you'll see, is I'm essentially just looking for any kind of pattern that I recognize on the right side of the chart. Oh, there's Airbnb hit the target just yesterday. And I flip through charts at about this pace, if not a little bit faster even, which of course comes from training, right? You got to train your eyes to recognize the patterns. It's not one of those things that comes naturally or comes easy. You've got to do that. And that's really where patterns and flash comes in. And that's the entire, that was the core original part of the tool, was that when I started in 2000, there's a falling through methods. When I started learning to trade, I read books, right? And back then in 2000, we didn't have the ability to do web shops. There was no YouTube. None of this stuff that we're doing now was out there. It was live workshops or books. Those are your learning places. And so I was reading books right and left. And I fell in love with charting. And just to give you an idea, I hated school. I hated to read so bad that and I tried to go to college, but we didn't get along. So I bailed on that after the first semester. I just hated school. I didn't hate learning. I just hated school. Partly because when I went to college, I said, well, I want to take a computer class. Well, you got to take this one. Well, I already know all that stuff. Can I just skip to the second one? No, you got to take that one to get to that one. So it's like, okay, I'll go through the process. Well, I was bored out of my mind, which was the same thing in high school. I read one book in my entire school days from front to back. Only one book that I read in its entirety. And that was Stuart Little in third grade. I finished that one. In my junior year of high school, I got about 3/4 of the way through Fahrenheit 451, which was required reading to do a book report. I think I went and got the Cliff Notes and finished the book report that way, just so I could pass. But so I hated reading. All of a sudden, here I am reading trading books. And I remember that after about a week, I finished this. I think it was John Murphy's book, 300 pages or 400 pages, whatever it is. I finished it in a week. And I remember, holy cow, I just started this a week ago because I hated reading. But all of a sudden, I'm like, I fell in love with something. And I was just soaking it up as much as I possibly could. And I recognized right away the power of patterns and how important they were. I don't know why. I just could tell. It was one of those things. And then I started looking for them in the charts and I would find them. But I would find them like this one you see on your screen, right? See this nice ascending triangle? It's beautiful, right? And then what does it do? I go back and analyze it and look at it and say, okay, here's the chart. Here's the pattern. Looking for about a $7 move if it breaks out above. And sure enough, what does it do? It breaks out, and how far does it go? That's beautiful, right? Look at it. That's a beautiful textbook ascending triangle. It's everything you want to see. And look at what it did. It broke out of the upper end, came back and tapped it, gave a roll reversal, and then rallied and went up and hit exactly at the target. That's a 7-point move on a $37 stock. That's almost 20%. How many of you took advantage of that? Anybody? Yeah, I didn't either, but it's okay. But the point is that this was the frustrating part that I got to, is that I would see patterns like this that were 6 months ago and recognize the absolute beauty of how the pattern played out. Ascending triangle, it's bullish, it's in a bullish move, it's slowing down, it bumps its head up several times, lows are getting higher, the highs are the same, and boom, it breaks out with big volume like it did here, gives us a dance for a couple of days, roll reversal, hits that 38 level, and then launches. And in 2 weeks, you're looking at least a double, if not 2.5, 3 times on your money if you're trading options. It's frustrating to see this, right? It's aggravating to look back and say, that's beautiful. And just a side note, this is normal. You're going to miss trades all the time. So as easy it is to get upset about it, we got to learn not to. At the same time, it's frustrating, right? So it's a matter of being able to recognize those on the right side of the chart. And the thing is it doesn't do you any good here, right? We can't do anything with it now. Whoops. But what if we could improve our skills enough to get to where we could see the patterns on the right side of the chart as it's forming, so that next time when a Freeport McMoran like that one comes up, then we can take advantage of it. Because you don't need to catch every opportunity. You don't need to be in every single one. There's Gilead. There's another ascending triangle. And this is one actually that was on the pattern of the week. And if, just in case you're not familiar with it, if we go, well, here's the flashcards. I'll show you this real quick so you know what I'm talking about. When I mentioned the flashcards, here's what they are. Right? My mom was a teacher, so we had flashcards around the house. And as kids, what do? Use flashcards for math, right? 2 + 4 is 6. And now as an adult, if you see 2 + 4 on a page, do you even think about it? Your brain doesn't even engage, right? So we'll take an ascending triangle since we had that. There it is. There's price patterns and then there's candlestick patterns. So you click on ascending triangle, and what this is going to do is open up some flashcards, which is just a training mechanism. It allows you to go in and say, okay, I want to train my eyes to see the ascending triangle. And you can either sit and wait for it. It's on a timer of, I think, about 5, 8, or 10 seconds. And there it pops it on the screen. So, right, it's just like 2 + 4, right? It's like a flashcard. You put it in front of your eyes, then you flip it over, you go, where's the pattern? Okay. So you can sit and click through if you want to go faster. And the beauty of this is I pulled these charts from the market. So they're real charts. You can actually, if you're really more OCD than I am, you can go up and you can see the date just barely up here in the company. So you could go see how they played out if you wanted to. So this part right here that we're in, notice that every one of those is an ascending triangle. So each of this section right here is individual patterns. So whenever you click on one, if you click on tweezer bottoms, that's all you're going to see. This is step one, where you train your eyes to see the different variations of that specific pattern. When you want to challenge yourself more, you go to combined price patterns. And now it's going to pull from this list randomly. These ones right here. I know my internet's a little bit slow today. It's taking longer to load than normal, but of course I've got a lot going. I've got a lot of stuff running right now that's bogging things down. So now what you've got is, of course, there's the ascending triangle. There's a broadening pattern. So you're going to get a list. You're going to get that whole list of price patterns is going to randomly come at you. So you don't know what's coming next. So you've got to be able to see it. In other words, you got to train your eyes more to see the pattern in that spot. And I won't go through. Conceptually, it's the same thing for candlestick patterns over here, individual ones. And then there's the combination. And then when you want to challenge yourself the most, this is a combination of price patterns and candlesticks. So this list of 30 to 35 patterns you see, this will just randomly give you the next one that shows up. But then what you'll see here is pattern of the week. This is something I started at the first of this year. And there are the last, 6 or 7 or 8 there. So the last weeks are there. And that is where this vertical line, Gilead, I put up as a pattern of the week. Back then, that was 719. Said, here's an ascending triangle. We're looking for about $5.50 of move. And as you can see, after it took a few weeks to develop and really get above there. It broke above there for a day, but it didn't hit the entry point. Yeah. Oops, excuse me. I thought I muted that. Sorry. A little cough. So after, I don't know, let's say 2 or 3 weeks, maybe 4 weeks, it finally hit the entry point and rallied for 3 or 4 days. It didn't get to the target as of yet, but it's just gone sideways. But most likely, had you actually gotten into this trade, you most likely would have stopped out on this day. You should pull your stop up as it runs. So you would have probably made a small profit on this, maybe a little bit. But that's just one example of the pattern of the week. Let me get back to what I do here. So we'll just start flipping through. Actually, there's one I like too, GLW. That was a beautiful double top. In fact, this is another one that was highlighted. That vertical line is another one. This was another pattern of the week back. Looks like that was, what's that, 514. So we had a double top, bearish engulfing pattern. The midpoint's right here. It broke the midpoint. The entry point was 43.22. And it took a few weeks. This was when the market was just kind of choppy, but this thing finally tanked. And I don't remember what the numbers were on it, but this was a nice, healthy profit. I did actually catch this one. Oops. So we're going to go out and keep looking for some that may. There's another. There's GPS. This is a nice descending triangle, the opposite of the ascending triangle. And this is the beauty of patterns. Right? Y'all saw that list there, right, of all the patterns? And some of you may have freaked out and go, 35 patterns. Well, here's the beauty. You saw a couple, 2 or 3 ascending triangles, right? Different ways you can draw on this, but yeah, I don't like that one. So here's a descending triangle. You flip it over, you got the same thing. So once you learn the ascending triangle, just flip it upside down, you got a descending triangle. And there is on the gap an opportunity for a bearish trade. So let's keep looking and see. I won't spend a whole lot more time. Oh, there's an inverted head and shoulders. Now I know, again, going back to this, and like I had the guy yesterday ask about how quickly do I get a headache? And the reality is, once you've trained your eyes to see the patterns, it's just like I use the reference 2 + 4 in math, right? Your brain doesn't even engage. Eventually you get to a point where you're running through this and it's just like, okay, there's a pattern, there's a pattern. And it's easier. I'll go here. It's usually easier. And I used to see, there's a nice descending triangle. It's actually starting to break up. Sorry, just got to look at things real quick. I used to look at these originally on line charts like this because it's easier to see. There's J&J. You can see that vertical line there. That's another one I highlighted, very much like Gilead in the same sector, right? Drug company. It rallied up, hit the entry point, and within a week or two, it rallied up a decent amount. And most likely you would have been stopped out here if you're trading it up some. So you would have gotten out with a small profit. You know, not going to be a massive home run, but there's a nice head and shoulders. Excuse me. Or at least it was. It's not really playing out now. This is another one you can see. There's another vertical line that JP Morgan was a head and shoulders, and I highlighted it there on that vertical line. But you'll notice it never hit the entry point, and it actually didn't even break the neckline. And this is, I can't remember the numbers. I went back and created a spreadsheet of all the patterns of the week that actually triggered and how they played out. And it was, I think it was only about a third of them actually triggered entry points. I'll have to go back and look at that. But the other ones overall turned out profitably. Here's one, Nordstrom, that did not. Another example of a head and shoulders. This is a beautiful one. It broke the neckline, actually hit an entry point, started to move down, but then eventually went up and stopped it out. So not every trade works out, right? In fact, if you're doing it right, you should be about 50-50. You shouldn't be making money on every trade. In fact, if you utilize risk reward properly, you should, a lot of times you'll actually lose more often than you win. But the beauty is when you utilize risk reward and you do it properly, it doesn't matter. You can be accurate 30% of the time and still make a profit. Now, if you don't believe me on that, I know some of you are maybe scratching your head. I see a lot of familiar names here. Those of you that have patterns in a flash. If you go to the bonuses, then what you'll see is risk reward. If you're questioning what I just said about being 30% right and still being profitable, then go watch this video. They will blow your mind. Because when I first saw it that way, the way I show it there, it blew my mind. So okay, there's Mondelez. This is one that came up a few weeks ago. Actually, this was another pattern of the week. I can't remember exactly when, but it was, I highlighted it as a head and shoulders, which is a little easier to see on line charts. Looking for it to break down. That was the trading plan. Looking for $3.50. And there still may be a possibility to get in. We'll have to see how this one plays out. There's another MGM head and shoulders was. But as you maybe have seen all the news out of China, there's a lot of craziness going on, it sounds like. I just heard a report yesterday that one of the, and I read about it this morning. Actually, I brought it up. I saw it was I can't remember where I saw it yesterday. I think it was on YouTube. Some news story popped up. And there was a commentator talking about it, how the, thank you, Amelia. The Chinese, the Lehman Brothers of China is either just did collapse or is about to collapse. And I read an article this morning about it. I pulled it up, Googled it just out of curiosity to find out if the source was, accurate or not. And there was an article on Reuters about, was it Everglade or something like that? I can't remember the name of it. But there was an article on Reuters talking about this, a banker in China that is heavily tied to real estate, is heavily leveraged, and is either on the verge of collapse or is going to collapse, just like Lehman Brothers did here. And so there's a lot of question whether or not the Chinese real estate market is going to collapse like we had in 2008. Now, whether or not that affects us here remains to be seen. But then there's also a lot of talk about regulators delisting certain Chinese companies for whatever reason. I can't remember what the reasons were, but so there's just a lot of craziness going on right now as far as the whole China stuff and whether or not the Chinese stocks, there's I want to say something I heard about, there's like 60 of them that are based in China. They're Chinese companies, but they're listed on US exchanges. And there's a possibility that US regulators will delist them and take them off of the US exchanges. So if you have any long-term positions, if you have any stocks that you own that are based in China, be careful. I don't know what's going to happen. It's hard to say. You never know. We're living in a really, really, really crazy time right now. Really crazy time. And who knows what's going to happen. And who knows how all this stuff will play out. It's really, really hard to tell. And you never know when something crazy is going to change. That's one reason I've got, I think, one stock. If I remember right, one, maybe two stocks that are longer term plays that I'll just hang on to. So now what we do, I'm going to skip to, so the first process, which again, getting back to this, I know I'm getting a little distracted going off on little tangents that just hit my brain. So this is the first step of the process, right? There is actually, oh, that's Moderna. This is a good looking symmetrical triangle. So what I would do is just flag that. Just thought I'd draw on there so you could see it. But see, this is the beauty of once you train your eyes to recognize the patterns, which if you didn't see, Amelia put a link in the chat box to get to the free trial for this for 2 weeks. So all I do is flag it, and you can see some of the check marks over here on the left side. And then I come down here and hit save. If you haven't seen, this is Omega charts, which you can get obviously through Wealth Builders. Where did that go? There it is. Now just hit create new symbol group. And usually I'll put, I'll name it. I usually put numbers on it. We'll actually do 01. We're going to do 02. We'll just put swing trades. So I name it, list it. There's 19. And obviously I didn't go through the whole list here. So this is step one. So I'm basically, good question. This is the first stage of the funnel, right? Essentially, I'm looking to just funnel things down. Take a chart, find a pattern, and then put that into a smaller list, which would be here. So now I've taken this huge list of 200 or 300 stocks, funneled it down to the best ones, right? Or at least not the best ones, the ones that I saw, the ones that I recognized, like the one on Moderna, right? So all I'm looking to do in that first step, which goes back to the headache, right? The guy says, how often do you get a headache? I'm looking at a chart for a second. And if I see this, I flag it, put it into this list. Now we're into the second stage of the funnel. We've taken 200 or 300 stocks, moved it down to, it probably would be double that, probably 30 or 40. And now what I'm going to do is come through and look for the best of the best ones out of this list. So big list, smaller list. Now I'm going to take and come up with the best looking patterns, the premium ones, the best ones for the next week, the next 2 weeks, the next 3 weeks, however long it takes before they play out. American Airlines, you can see this is obviously one that I've had on the list. And we've got a descending triangle that's taking place. Already have a trading plan in place. In fact, okay, that's going well. You can see this thing's triggered a couple times. Over the last couple of weeks, it's actually hit the entry point. The question is this a premium pattern? And do I need to adjust it now based on what's happening or not? I don't think so. I think it's good. We got the descending triangle in place. And the bottom, we could put a line down in here. So this may still be a decent opportunity if it drops off from here. In fact, I'm going to adjust that just a little bit. And sometimes this is necessary. You adjust a little bit here and there. And I'm not sure why the airlines took off yesterday, but they ran up with pretty solid volume. They had a lot of momentum in the beginning of the day. And then at the end of the day, this shadow, you can see it just sold off real heavy, which was good because I wanted to see it close below 20. As long as it stays below 20, I'm happy with this one. I like this one. So I'm going to flag that as a premium pattern because I like the looks of it. All right. We've got the descending triangle. And actually, if we do the measured move, and I'll go off the new, if we use that dashed line, this is where it's always tricky. So you can go all the way out to the edge of the triangle. I'm going to go a little more conservative and go in here. You can go either one. The beauty is that if you're in a trade and it keeps going, then that's okay, right? It's like a bonus. So the measured move, the expected move will be there. Unless, and sometimes I'll do this, you can come out here to the outer one and look at it and see just to get a different view. And there's the interesting part is there's the measured move. There's the expected move right there. The next major support levels are about 15. So what we could do is, again, put a target here. If we're adjusting this, and obviously you can see I already had a trading plan in place here. And if we make a new one, which is what I'm going to do, and I'm going to make it all the dashed line. So the first question usually is, where do I put a stop? Right? I'm going to get back to candles here. Just alerts. Don't need to panic. So the first question becomes a stop. So if I like this pattern, which I do, I love it. It looks, the descending triangle actually with that dashed line is even better looking, right? We got a drop, the market or this stock itself has been dropping, bounces up, comes down, creates new lows, creates this bottom, this baseline, this bottom lower support level. And then the highs continue to get lower, which is a bearish indication, right? We got lower highs and the same lows. And if it breaks those lows, the odds are it's going to continue down. One of the reasons I love the looks of this, even with this newer lower level, 1850 to 15 is $3.50. $3.50 on an $18.50 stock is what, 19%? That's a big move. A big move. So generally speaking, when it comes to options, if you buy options, you're going to get, for every 1 percentage point the stock moves, you get about a 10% move in the option. So if you get a 10% move in a stock, you're looking at approximately a double on an option, about 100% rate of return. So if we're looking at 18, 19, 20%, if the stock moves that big, which we went 26 to 20, that's 6 points. That's actually a 30% drop. So if it drops 15 to 20%, you're looking at 150, 200% rate of return. Again, just conceptually speaking, generically speaking, that's usually what happens. So even with the new potential, which I'm going to get rid of these red lines, just getting a little too cluttered on here. Kind of tweaks my ADD. We don't necessarily need those anymore. We've got what we need there. So the question becomes, if it breaks below this 1850, which you can see there's support here, old resistance here, old resistance here. It broke above it here. But if we break down and then it turns back to the upside, at what point do we get out? And I'm going to put that stop just slightly above the low of that day and above these two dips that hit the support line. And since we're creating a second plan, I'm going to change these so they're all small. I know this is almost too cluttered for me, but now we'll create that one and then bring up the risk reward calculator, which will give us our 3-to-1. Stop is 1879. Target, we're going to go with the 1612 actually. And then if it goes more, it's just a bonus. So 1812 is the entry point. So now we have a trading plan in place. I'm going to zoom this in so it's a little easier to see. And I'm going to get rid of the volume so we can go through it a little bit easier. I think, maybe not. I'm trying to scrunch it down. There we go. So we have a good looking descending triangle coming on the heels of a downward trend, which is exactly what we want to see, right? And this is the stuff that I go through in all the videos on patterns in a flash, because I know I showed you the flashcards. If you go to the video section, every single one of the patterns that are in there for flashcards, well, there's the basics. So there's the foundational stuff, but then every single pattern is covered here on an on-demand video. You can go watch it any time of day or night. So what I do is go through the concept of the pattern, what to look for, what makes it strong, what makes it weak, and what we're looking for, and then how to trade it and where to enter the trade. So the beauty of this is that we're in a position, there's two different ways, two different potential trades here. We've got a nice little downtrend, right? Short term, intermediate term, descending triangle. If it breaks the lows of that 1850, then the entry point is 1812 with the target of 1612, with the possibility of it running to 1512. And the stop's at 1879. So we have, what was the risk reward? It was $2. Yeah, it's exactly $2 of potential with what, 80 cents of risk. So that's exactly what we're looking for. So I would call this a premium pattern. It's about as textbook as it gets. The volume's just right. The volume's getting lighter as the pattern develops. I don't know if that was an earnings. No, earnings was back here. But the volume accelerated here as it started to kind of break. So everything about this is pretty solid. I like American Airlines. Let's take a look and see if there's any other good ones. AES, this is very similar. And it also looks, it looks very solid. This is a utility company, another descending triangle. So considering it's the same pattern, we'll leave that alone. I mean, you could go with that if you want. This is another one that we're looking at about $3 of potential on a $20 stock, $23 stock. So that's about 12 to 15%. Y'all see that pattern there? Let's start from scratch on this one. That one's a little more challenging. It's actually a candlestick pattern. A little hint. Can't see it now, though. Let me move that down here. And the first thing I do as far as when I'm analyzing a chart is go back and look at the entire history and see if there's any, look at the major points. Now, candlesticks are much shorter term in nature. Where did that go? Okay, that was weird. Y'all see it now? This is a falling three methods. Is it textbook? Is it beautiful? No. The textbook falling through methods would have 3 little days, kind of like this day right here. Grab a pen. This day right here, we'd have 3 of those inside this first day's body. So the textbook falling three methods, I can't draw worth of beans, obviously, is this. And then this. And these would be filled in, right? These would be down days. That's terrible. That's the reason I'm not an artist. So this is the textbook falling through methods. It's 3 little days inside of the first day and then a big day that follows it. So what we have there is not a beautiful textbook pattern, but it is still a falling through methods nonetheless. Would I consider this a premium pattern is the big question. Absolutely not. Why not? Because first of all, it's not, you have a couple of days, well, 3 of the 4 days that are in between are big. 3 of the 4 days, actually almost all of the days, well, the third day doesn't, but the other days get outside of the bodies of the first day, which isn't necessarily bad. And typically what you want, a falling through methods is a continuation pattern, which means we're likely to continue the downtrend in this case, in a falling 3. And a rising 3 is the opposite, right? But there's not really a downtrend here. There's one big gap to the downside. So there's really no previous move because almost every single pattern out there is all based on the previous move. What is the move before the pattern shows up? And here, there's no downtrend. There's no downward move. So I don't like this pattern spectacularly. I wouldn't call it a premium pattern. I'd call it a mediocre pattern at best. Would I trade off of it? Probably not. But then again, if we've got a solid support line, which this is not even that solid, we got the resistance level here. If it broke below there, you know, a quick trade maybe to 1168, but even that's not that spectacular. So I don't think I'd place a trade off this. This I would not consider a premium pattern. The first two, AAL and AES, yeah, those are good looking patterns. AMD, now just looking at this, I would say this is absolutely a premium pattern. You've got lots of momentum. This is kind of a blend between a symmetrical triangle and a flag pattern. All right, the symmetrical triangle is my favorite continuation pattern, which, as you can see here, this is exactly what we're looking for, is basically just a pausing pattern, if you will, where the stock has moved in a specific direction. Usually it's in a longer term uptrend, and then it's just taking a breather. And I use this analogy a lot, which I don't know, works for me. If this was me running up a hill, sprinting up a hill, this is a sprint on as steep a hill as you can get. Now, I'm not in the best shape of my life, and I'm getting older. So if I sprinted up a hill that was this steep as fast as I could, I'm going to have to catch my breath for a while. I can't just keep running forever. And the steeper the hill, the faster I run, the longer of a break I'm going to have to take. So this is completely normal, understandable behavior that this thing for the last 4 to 6 weeks has just danced around, catching its breath. Because that was a big, fast, super quick run. And I need to recover before I continue to run to the upside. And here's the funny part is that, I mean, this is not necessarily a pattern, but you've got a channel. And note that this is just proving how beautiful technical analysis is that a lot of times, and you'll notice that a lot of channels that stocks get into are equidistant, right? They get stuck in a range like this one did for several months. And when it breaks out of that range, it usually runs about the same amount. Just a side note. But what we've got now is that huge run with lots and lots of volume, which that created a ton of momentum, which is a very bullish sign. And now this thing's stalling out, dancing around, and you'll notice that the volume is getting lighter. If you look down at the bottom, the volume, even though the average line has even dropped off significantly. So the volume is getting lighter as it's catching its breath, which is exactly what we want to see. And then if the only problem with this right now is that it is almost all the way into the apex or the point of the triangle. Typically what we want to see, and this is one thing you'll learn in Inside Patterns and Flash, is that you want to see a breakout between about the halfway point of the triangle and the 3/4 point. The further it goes into the apex, the less potent the pattern becomes. And right now this thing is right into, I'm not sure, I was looking at this morning. I'm not sure where it's at. Trying to see, where is AMD? I thought I had it on my list here. It's not, oh, I need a list here. I had a list here, I swear that was up. There it is. Yeah, there it is. It's at 104.56 right now. $104.56. So it is down on the day right now. It is basically right there. So depending on how this thing closes out today, if things rally, if the market finishes the day strong and comes back and rallies back up and this thing goes up, then there may still be some potential there. If it breaks down, it continues lower and it breaks below that trend line, especially if it breaks below this 103.38 level, then the pattern is negated. So back to the question, would I consider this a premium pattern? No, not right now. Not at all, actually, because the fact that it's all the way into the apex of the triangle. Does that mean I wouldn't trade it? No. I would just reduce my position size. So if this breaks out, and I'll show you exactly what I mean, is Apple was one that I highlighted on the pattern of the week. And I'm actually going to take all that stuff's been negated. And do y'all see this one? This is another after the fact, but it's a good example of what can happen And if you completely disregard trades because they're not premium, obviously I only like to trade premium patterns, but it doesn't mean just because it's not as premium as I like it, doesn't mean I will skip the trade. And here's why. You notice Apple, I mean, the halfway point of this triangle is right about there. 3/4 point is somewhere right around here. And we traded quite a ways beyond that point. And obviously this is subjective. So it depends on where you draw your lines. On some, there's a charting platform on Thinkorswim. It will draw the lines for you and show you. On their platform, the way they measure it, it was still within the range. But the way I have this drawn, that's approximately, and I don't get OCD anymore. I used to go and measure exactly. This is approximately 3/4, and it went quite a ways beyond that. But notice that it still broke out and it still played out almost perfectly. And you can take this spot, depending on where you want to draw your lines, whether you want to put an aggressive one on there or more conservative. And I usually will look at both just to see out of curiosity. And you'll notice that when this thing broke out, it actually ultimately went to the bigger one. But it still moved 15 points in a matter of 3 or 4 weeks. And I don't know, who was that? Was that you, Paula? I'm trying to remember. Somebody took advantage of this trade and they were all upset because they only made 22%. Saw it on the pattern of the week, got into the trade and only made 22%. But it's still frustrating when you miss, right? If you make 22% and you would have made 50, it's still frustrating, right? But it's going to happen. So you got to get used to that mentally. But this is an example of one that negated the rules. It was past the point. Okay, good. So I'm not losing my mind yet. That's good. So it was past the point where I would consider it a premium pattern, but it still played out perfectly well. So AMD is the same type of situation where, because it's traded so deep into the apex, I wouldn't consider it a premium pattern, but as long as it stays at this point, if this thing stays above that lower line, and if it takes off, and especially now if it breaks out of that downtrend line, then I would still consider taking a trade on it. I would just take a smaller position because the pattern is no longer premium. It's mediocre. And obviously if it breaks down below that 103.59, it's not only mediocre, it's gone. Throw it out the window. Does that make sense? Hopefully that all makes sense. So Boeing is another one that I love the looks of this. We have, after the COVID crash here for Boeing, at least, it started an uptrend, right? We've come back and tested it a couple of times and we are sitting right on that point. Now this is a symmetrical triangle, but the question ultimately becomes on this one, when we're looking at it and analyzing it, is, okay, we're in this longer term uptrend. We're at that line right there. The symmetrical triangle is typically a bullish, well, it's a bullish or a bearish continuation pattern. But for this to be a bearish continuation pattern, we want to see a longer term, more entrenched downtrend. And we really don't. It's only short term. So this is another one that is kind of tricky to a certain degree from a pattern perspective, because which one do you treat it as, a bullish or bearish? But as you can see, once we dig into it a little bit, the momentum, big drop to the downside here, another big drop to the downside here. And now just the last 4 weeks or so, we've just been dancing around here. And we're essentially sitting on that longer term trend line. And we are technically outside of this triangle. So as you can see, I already have a trading plan in place for this. If it breaks to the downside, I think there's a good, what's that, 18 points of downside. The stops there at 216.40. In fact, probably should adjust that a little bit because it's gone up and hit that a couple of times. And I just noticed we've only got about 5 minutes left. So if you all have any questions, like that's two, then make sure you send them in the chat right now. I'm going to adjust this one just a little bit. Now the question becomes, is this a premium pattern? If it breaks down, yes, I love the looks of this one because it's challenging the lower line. We've got lots of different things coming into play, multiple to 1140. So that's just a little tiny adjustment, not big. But we've got that longer term trend line in play. We've got a symmetrical triangle that, while it's hard to tell if it's going to trade bullish or bearish, when you look at the candles and the momentum that we've had to the downside, it definitely leans bearish. And we're below that lower range of the triangle, and we're sitting and just dancing on that longer term trend. So if it breaks down from here, I would feel very comfortable with the bearish move, especially if the market continues to trail off like it has been. Let's see if there's a, oh, here, this is one. Actually, I wanted to get to this. Now that we only have a couple minutes left. This is definitely, I don't even have to think about it. This is a premium pattern for certain. And here's why. Well, holy cow, I just noticed something else too. Y'all see the other pattern that's here? I didn't look at our line charts before, but there's also a head and shoulders here. Whoops. I don't love the steepness of that line, but realistically, the first pattern that I saw is a double top. Right, we've got a peak here and a peak here. Now, the beauty of this, and this is the type of stuff you're going to learn inside Patterns and Flashes, not only recognizing the patterns, but being able to see everything. And this is where a lot of people get really focused on candlesticks and only candlesticks. Thank you, Amelia. But when you take price patterns, not only when you understand just the basics of charting, just the foundational stuff, right? What's a trend? How do you define a trend? Roll reversal, round numbers, all that type of basic stuff. You combine that with the patterns, understanding price patterns, and then you combine it with candlestick patterns, it becomes crazy. And it's just, when you can parse out the little things and see the little things, it certainly helps. And here's what I'm looking at. Let me grab my pen because I think that'll be easier. So obviously the stock runs up, right? And it creates a peak here. We've got a hangman right here, a shooting star right behind it. The candle behind it is basically another hangman. Probably better if I do this, right? So you've got three, and I can't remember if we've got, this is not an all-time high, but definitely there's some support, what used to be resistance there. In fact, I'll bet that would come into play too. This thing's getting slow. Yeah, of course, that comes up and almost tagged it that day. So you've got 3 days here of bearishness. Oh my goodness. Trying to get in big so y'all can see it well. So we come up to a high. We almost hit that downtrend line that's been in place for a while. We got 3 bearish candles, hangman, shooting star, another hangman. Couple of days down, little retracement, and then boom, it drops off. It comes in, tags this support line, hits it, and reverses and runs back up. Then we got a little spinning top here at resistance, which says we're slowing down. And the next day, we get a bearish engulfing pattern right there. Completely engulfed the previous day. Now, the only thing that doesn't make that super strong is that the volume is light. Right? Here's the volume down here. It's only at the average. If it had big volume, that would make the signal stronger. Okay? It would make it more premium. But then what's happened? So we have a double top that formed. It's not only formed with, it started here with three bearish candlesticks and a bearish reversal pattern, the engulfing pattern at the double top. And then the last 4 days, this thing is just tanked. Now, obviously, getting into this thing now is one of those things I would not touch unless, I don't know where it's at, but could it continue to fall? Yes, most likely it's going to retrace some. So I would be looking for this thing to pop back up and do a roll reversal. But the beauty is that this is exactly what we're looking for in a double top, is a good solid resistance level, 2 peaks. Candlesticks confirms that those are good. The midpoint, which is right there, once it breaks the midpoint, which is here, right? Because you've got the M pattern, right? This point right here in the middle is the midpoint. The confirmation of the pattern comes when it breaks the midpoint. So once it breaks this point, which is what it did yesterday, it broke down, not only broke down, but it accelerated. Look at the volume. Even though it wasn't a massive increase in volume, these 3 days have had an increase in volume as it's continued to fall. That's a very bearish sign. Very, very bearish. So this is, I would actually, as far as all the patterns we've looked at today, this is the best looking one. And here's why, just to recap it all. A double top here, which is confirmed with the bearish engulfing pattern. After, you can see even the previous peak, you got 3 bearish candles. The momentum accelerating to the downside. It broke the midpoint here. We do technically have a head and shoulders here as well. And this is the neckline. It cracked that neckline just a couple days ago. Now, what I'd be waiting for here, so all these indications say that it's very, very bearish. The question becomes, because analyzing this and seeing, okay, it's very, very bearish. All the indications are extremely bearish. Then how do we trade it? And obviously you can see the trading plan I have in place, which had already cracked it yesterday. Let's see, where is this today? CNP. Ooh, things are cracking down. CNP. We're going to finish with this and then got to wrap up. 24.63. So it's not really doing much of anything today. It's down 5 cents. Which begs the question is, where do you get into this thing? Do you wait for it to retrace? And what I'd be looking for on this, considering it's already dropped off for 5 days in a row, I'd want to see over the next few days it bounce back up. There's another thing too that I know I mentioned earlier is round numbers. If you're not familiar with round numbers, so these are the 2 things I'd be looking for with this stock, is a roll reversal and round numbers. Those are 2 lessons in there that I cover, which basically says that if we come back up and hit this 2509, which is a round number, which is also the support level, if we rally back up and hit that and then roll over, that's confirmation that the pattern is solid. Right now, we've broken the midpoint. Everything about this is beautiful. It looks bearish, looks super bearish, but it's beyond my entry point. Would I possibly go look at an intraday chart? Now, here's a little caveat I'm going to throw out there. Here's the intraday chart on CNP. And you can see that obviously those lines are not the same for that. This is a day trade that I was looking at. It was yesterday or the day before. We could look at this and say, okay, it's stalling out right here. You could realistically go to the lows again here and possibly take a position to the downside and realize that your risk reward is not quite as good because you're beyond the 24.83. So what was it, 24.50 or so? So it's already down here. So your risk reward is a little bit out of whack. Could you adjust your stop down a little bit and make it better? Yes. Would I take a lot smaller position if I was going to do that? Yes. Personally, I'm in that place where I would just steer clear of this. And if it tanks without you, you missed another one. Whoop-de-doo, right? It happens all the time. Right now, it's just dropped off so far. Just like you can see here, last time it dropped off for a couple of weeks, it bounced right back very quickly. And this will most likely bounce. It might drop for another day or 2, and then maybe it'll retrace back up. But what I'm ultimately looking for is for this thing to bounce back up, come back up to that 25 area, and then I would put a hook down here at the 24.83 and say, okay, if it drops from here, I want to be in the trade. And it probably will take a little longer. It won't be a drop like this, most likely. But in order to have it be an ultra premium pattern, that's what I'd want to see. That's what I'd expect to have this stock do. Does that make sense? Now I'm officially 5 minutes over. I was trying to cut it off early, but I get a little too excited. And then I stumble across stuff like this, and this is just beautiful. So definitely a premium pattern. I'll flag that one. AES, I think that's premium. AEL is premium. AMD, not so much. AMD and Boeing are definitely one or 2 notches down. But CNP, I would definitely consider a premium pattern. I love the looks of it. I just want to see a retracement first before I would get bearish on this thing. Clear as mud? Any questions before we wrap up and call it a day? Just real quick. If you haven't noticed, Amelia put the link in there for Patterns in a Flash, if you want to grab that. And again, so next Wednesday night, we'll be doing a 1 hour live class, just like we did here, except we'll talk about whatever we want to. I'll usually what I'll do is find a pattern that's pretty prominent in the market that's happening. And we'll go through that, and we'll go through charts kind of like we did today. And then you'll also have an opportunity to get 2 patterns of the week for the next 2 weeks. And then if you like it and you find that it's beneficial and you get through all 8 hours of the video that's on there and you practice with the flashcards, then get it. If the value's there, get it. So with that, y'all know my saying by now, right? If you're going to fail one thing, fail at quitting, because as we know, trading is tough, right? This is not easy. It is simple, but not easy. It is very challenging, mostly keeping your head straight and being disciplined and making sure that you are really only trading the premium patterns. That's ultimately what we're here for, right? And that's one thing, especially in my day trading, I've learned. I pulled myself back. And since I started looking and finding only premium patterns and only trading those patterns, I'm back on track. So things are good. Anyway, all right. This is Pattern Whisperer signing off. Y'all have a great day. Take care. God bless.